Welcome back to the cryptowrld channel, everyone. My name is Josh, and right now this short-term warning signal just confirmed for both Bitcoin and Ethereum, which I'll talk more about later in this video, so definitely watch to the end. First of all, just giving you a quick update on the daily Bitcoin chart, and right now the price of Bitcoin at the moment is still currently looking slightly more bullish than bearish on the daily time frame, because technically speaking we're still in a higher high, higher low price structure as of right now, with the RSI playing out a breakout and the MACD still showing a wave of bullish momentum. But compared to yesterday, we've potentially lost a little bit of bullish momentum here, because for example the MACD has seen a very slight decline in the histogram since yesterday. And if you're looking at the daily Bitcoin RSI, we're potentially starting to form lower highs. And obviously, if we continue to see a lower high, lower low price structure form in the daily Bitcoin RSI, that is more of a bearish signal, which usually tells us we're about to see some more bearish price action. But at the moment, we haven't fully gotten to that stage just yet. So once again, on the daily time frame, we're still looking slightly more bullish than bearish, although this bullish momentum is beginning to potentially fade away. But this is all talking about what's mostly happening just in the more shorter term, which I'll talk more about in just a moment. But first, zooming out to the 3-day Bitcoin chart, and at least as of right now, this breakout from the falling wedge pattern on the 3-day time frame once again is still looking strong as of recording this video. And something similar can be said about the 3-day Bitcoin RSI. Once again, we still have a strong breakout in this indicator above this significant level of resistance that has been forming for just about 2 years now. And so on the larger timeframes, like this 3-day Bitcoin chart, technically we still have some active bullish signals to pay attention to. But considering not much has changed on this chart right here since yesterday, getting straight into the 8-hour Bitcoin chart, and right now the price of Bitcoin is still finding resistance along this range of resistance, which is coming into play in between around 20.9k to 21k, as I've also been talking about over the last few days. And so even though this technical price target at $23,000 per Bitcoin based on this symmetrical triangle pattern is still technically active, because we're still technically within the breakouts, but even though that's the case, once again, we still need to pay attention to this level of resistance at roughly around 21,000, which is currently holding up the price of Bitcoin. And in case you didn't already know, significant levels of resistance like this do actually have the potential to stop the Bitcoin price from actually reaching these technical price targets, which is why I personally always have a stop loss on my trades. If I'm trading a breakout like this, for example, then personally I usually move my stop loss into profits as the trade moves into profits, so that in the worst case scenario, let's just say if the price turns around at this point of resistance and does not reach the technical price targets, then even in that worst case scenario, if the price dumps back down again from here, then if I have a stop loss up into profits, then that stop loss will simply stop me out of that trade in profit. So even in a worst case scenario, I'll still be making profits. But it is important to mention that that is just letting you know what I personally do for trades like this, for example, and that should not be taken as personal financial advice, because I don't know your personal financial situation, and also whatever you do with your own money is obviously completely up to you. But anyway, zooming into the shorter term, taking a look at the 4-hour Bitcoin chart, and once again, right now the price of Bitcoin is still finding resistance around 20.9k to 21k, and that is due to the fact that we have the golden pocket range of resistance sitting right at that price range. And obviously, for those of you who have been watching my videos for even just the last 1 week, you would know that this range of resistance at around 20.9k to 21k was already an expected range of resistance even before we got this first rejection. So the fact that we're finding resistance here shouldn't really be that surprising. And so once again, like I said in my last video, 21,000 is definitely the level for the bulls to break above in order to continue another leg to the upside. And if that happens, if we end up seeing the price of Bitcoin confirm a break above 21,000, then that would likely send the price of Bitcoin up towards this next Fibonacci level of resistance, which is sitting at around 21.7k, and anything above that level, then I'll be looking towards around 22.7k, which is this local high. And as for some short-term support levels, we still have support at around 20.3k, around around 19.7 to 19.8k, around 19.1k, and around 18.7k as some shorter term support levels. And now if you're looking at the short term price trend, technically speaking, this is still a bullish trend based on the price alone in the short term, because we're still seeing higher lows and higher highs in the price of Bitcoin in the short term. Although with that being said, even though technically speaking we're in a bullish trend based on the price action alone in the short term, this bullish trend is now potentially beginning to lose bullish momentum, because we do have signs on the chart telling us that we're potentially losing bullish momentum right now. Because if you're looking at the 4-hour Bitcoin price oscillators right now, starting off with the 4-hour Bitcoin MACD, at the moment this is currently starting to show a little bit more bearish momentum compared to bullish momentum. For example, just over the last 1 day or so, we saw a very slight bullish cross in the 4-hour Bitcoin MACD, although this only lasted for just a few hours before then we saw another bearish cross. And so once again, just in the short term in this indicator, the bearish momentum is beginning to become a little bit more frequent than the bullish momentum. And now if you're looking at the 4-hour Bitcoin RSI, this is currently forming lower highs, while the price action is actually forming slightly higher highs, which is technically a bearish divergence in the short term here on this 4-hour time frame. And once again, what a bearish divergence means is that we're due to see reduced bullish momentum, so basically not as much upside price action, because the most common outcomes from a bearish divergence are either choppy sideways price action or a slight pullback in the price of Bitcoin. So once again, less bullish momentum in the short term, talking about the next 1 to 2 days potentially. And now technically speaking, this bearish divergence has already been confirmed with multiple 4-hour candle closes, because as I mentioned in my last video, all we need to see is just a higher high in the price action in terms of the candle closes and a lower high in the RSI. And then to actually confirm that divergence, we need to see at least one 4-hour candle close in the red in order to cement a lower high in place in the 4-hour RSI. And obviously, considering that has already now happened with also multiple other 4-hour candle closes since then, we already now have multiple confirmations in terms of candle closes for this 4-hour Bitcoin bearish divergence, which once again means that we're due to see reduced bullish momentum in the short term, and on the 4-hour time frame, that usually means over the next 1 to 2 days. But anyway, getting into the Ethereum part of this video, this right here is the daily Ethereum to US dollar chart, and right now, technically, we are still playing out this breakout on the daily time frame above that resistance at around 1.4k. But like I mentioned yesterday, the daily Ethereum RSI briefly entered back into overbought territories, which was a signal on this chart right here telling us that we're due to see potentially another short-term cool-off in the price of ETH. And obviously, since my last video, we have definitely seen a short-term cool-off so far, with the price action experiencing a slight short-term pullback, almost going sideways in terms of the daily candles since yesterday. And as I've also been talking about over the last few days, I've been comparing this breakout to this previous breakout that we saw back in July, because once again, if we're looking at this previous example, we went from a lot of bearish price action into choppy sideways price action, which was looking like a possible bear flag until we saw a confirmed break above resistance, which was a bullish confirmation signal telling us that we're about to enter into a more bullish trend. And now if you're looking at what's been playing out more recently, once again, we went from a lot of bearish price action into more choppy sideways price action, which was looking like a possible bear flag until the point where we broke above resistance, which was a signal on this chart telling us that we're about to experience much more bullish price action on the daily time frame. And also, just like this previous breakout during July, we're seeing the RSI and the MACD trending towards the upside on the daily time frame, which are showing bullish momentum once again. But just like we saw with this previous breakout back in July, we saw the daily Ethereum RSI brush against overbought territories, telling us that we're getting a little bit too overheated and that we're due to see a bit of a short-term cool-off before continuing any higher. And now this short-term cool-off that we saw back in July lasted for roughly around 1 week or so before we continued higher with the bullish trend. And it was because of that fact that we had quite a lot more room left to the upside in the price of ETH on the daily time frame, once again due to the fact that we saw over a week worth of cool-off where the price action was basically trending sideways, and then we actually saw a slight pullback. But if you're looking at what has been happening over the last few days, once again we saw the daily Ethereum RSI briefly enter into overbought territories a few days ago, And then we ended up seeing a bit of a short-term cool-off that lasted for around 2 days, but because that only lasted for around 2 days instead of an entire week, that meant that the room to the upside was more limited. We had less room to the upside this time around compared to this previous time because we did not see that same length of cool-off to help reset the RSI. And so this means just a couple days later now, we're already due to see another short-term cool-off because, like I said yesterday, the RSI briefly entered into overbought territories, giving us that same signal. And so basically, in order for the price of ETH to repeat price action similar to that, where we basically see quite a lot more bullish price action on the daily time frame, we would first need to see more of a short-term cool-off relative to the daily time frame, which is talking about at least a few days, maybe even up to a week or so worth of cool-off before we continue even higher later on, because otherwise, if we don't see that and instead the price just simply tries to push higher and higher, the room to the upside will be much more limited and we would likely turn around into another bearish trend sooner rather than later in that scenario. So these cool-offs along the way are definitely healthy for an uptrend, and that is potentially what we're due to see at the moment on the daily time frame based on this overbought signal. But anyway, zooming into the shorter term, this right here is the 4-hour Ethereum to US dollar chart, and right now we're seeing a rejection from the 78.6% Fibonacci level, which is sitting at around 1650, as I also mentioned yesterday. And so due to this short-term rejection from this level of resistance playing out right now, the short-term support level that I'm currently watching is this previous golden pocket level of resistance, which is sitting at around 1550 approximately. And now if the price of ETH starts confirming a break back below around 1550, then the next support levels to the downside would be sitting at around 1480, around 1410, and around 1330 approximately. And as for some short-term resistance levels, once again, we still have this resistance level sitting at around 1650, but anything above that, if we see a confirmed breakout, then I'll be looking towards around 1780, close to 1.8k, which is where this local high is sitting at for the next level of resistance in the short term. And now, like I said earlier in this video for Bitcoin, in terms of the short-term price trend, technically this is still looking more bullish than bearish because the price itself on this 4-hour time frame is still forming higher highs and higher lows. But even though this is technically still a bullish trend as of right now, we're beginning to see signs on the chart telling us that this bullish trend is potentially losing bullish momentum. And these signs are once again the 4-hour Ethereum price oscillators, because for example, the 4-hour Ethereum MACD at the moment is beginning to show reduced bullish momentum with less bullish swings to the upside and slightly more frequent bearish swings to the downside in terms of the histogram within the MACD indicator. But one of the more important short-term bearish signals that we're seeing at the moment on the 4-hour Ethereum to US dollar chart is in the 4-hour Ethereum RSI, because as of right now, once again, the price action is forming higher highs while the RSI is currently forming lower highs. So once again, as I mentioned yesterday, this is a short-term bearish divergence. And once again, I did actually warn about this pattern in my last video, but in my last video when I recorded it, it was not yet confirmed because we didn't yet see that 4-hour candle close in the red. But from the moment we saw that 4-hour candle close in the red right there, that technically confirmed this bearish divergence on the 4-hour time frame, which means that we're due to see reduced bullish momentum, which usually plays out in the form of either choppy sideways price action or a bit more of a pullback just in the short term, kind of similar to this, for example. And generally speaking, a bearish divergence on the 4-hour time frame usually plays out over around 1 to 2 days. So potentially over the next 1 to 2 days, we should be expecting reduced bullish momentum. But it is important to mention that that doesn't necessarily mean we're due to see a trend reversal into a short-term bearish trend, because in case you didn't already know, a bearish divergence can occur within a bullish trend, just like how a bullish divergence can occur within a larger bearish trend. And so in those cases, it simply acts as more of a short-term pause within the trend, kind of like how we can experience some short-term bearish price action inside a slightly larger bullish trend and vice versa. And now, if you want to know how to maximize your profits in crypto during times like this, then make sure to check out these videos popping up right here on your screen. The video in the top left of your screen shows you how to make money in crypto when the price is either trending up or trending down. And the video in the bottom left of your screen shows you how to make money in crypto when the price is chopping around sideways. But anyway, Anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.